Our market master of the day is with us. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, great to have you with us here. Thank you very much for your time. Mahesh, the last you were on the program, I think it's been a while. You were a bit cautious overall. How are you looking at the market now at an aggregate level in terms of what we've seen in terms of earnings, what you're hearing from managements that you speak with, and earnings potential overall?
Yeah, so I think clearly last time we were a bit cautious because I think the slowdown what we are witnessing globally, one would have thought that they would have some impact in terms of earnings growth for this fiscal year and going forward. But what we've seen is that the commentary, especially all companies which are focused more on the domestic economy, have been fairly decent. We haven't seen much downgrade to earnings after the first quarter numbers. Earnings growth still remains around in the mid-teens for this fiscal year. And while there have been a few sectors like IT and some of the sectors where we have seen some amount of downgrades, but overall numbers have been fairly good. And the commentary has been, you've seen some improvement in terms of consumption, okay, which was seen a slowdown last fiscal year. So that is seeing signs of improvement over there. Overall, capital good industrial sectors are seeing surprisingly actually a good improvement in their order intake. And a lot of the exporters, one would have thought would have got impacted. But I think the challenge is what we are seeing in the Europe in terms of the energy crisis, production shutdowns. Some of the companies in India are actually seeing there's an opportunity to really supply to those markets. So exports haven't been as bad as one would have expected, when we're seeing global growth slowing down. It's only the global link sector, global cyclicals, which probably have seen a downgrade to earnings, which is metals. And so I think given that, I think the outlook looks fairly good from India perspective. And markets have actually done much better than one would have expected. I think relatively India looks much stronger in terms of a global backdrop where we're seeing across, whether it's US, Europe, China slowing down. And that has probably led to the multiple expansion, what we're seeing relatively for India compared to the other markets.
Got it. By the way, just, the market's getting a bit volatile. It's sort of from the highs taken a bit of a nosedive because of Reliance and HDFC. As I discussed in the morning, it's not a market in which a linear view would work. Every day there's some volatility intraday. Mahesh, good morning. So just to carry forward that point, it's been a bit of a bipolar market, right? The domestic stocks have done so well. Autos, FMCG, some banks, while the export-oriented stocks clearly have been taken to cleaners have been underperforming. Do you think that sort of basic trend would continue from here on as well?
Yeah, so I think looks like because India's, especially in this period, where we see global disruptions, we haven't seen that at the right side, whether it's on the energy side, whether it is on the food prices. We've been able to manage our internal economy pretty well. Inflation also, while it is high, it's not very high. So, and the fact that globally we're seeing commodity prices coming down. India is a net exporter of commodities. So a lot of companies will actually see that benefiting. So ironically, while we are seeing a slowdown globally, marginal slowdown, as long as it's not going to be a major global recession, is actually good for India because a lot of the companies would see margin expansion and that's what the market is actually celebrating in a few of the sectors, whether it's in the auto sector, whether it's in the cement sector, where margin improvement would probably mask the slight slowdown in the top line growth. And I think that trend will continue, though I think the valuations there on some of these sectors are now probably above the long-term averages. So multiple re-rating is unlikely. But as long as the outlook remains good, I think over a period of time, you would see these sectors outperform the global cyclicals.